What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today I'm joined with Boone Nerren. Is that how you pronounce your last name, Nerren?
Nerren it is.
Nerren it is. Excellent. How are you doing today, Boone?
Doing well, thank you.
Excellent, excellent. And I got some great news for you, Boone. Today, we are joined with my very favorite audience member. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial syndicators. Why would I do such a thing? Well, if you want to get access to private deals, then you need to have a documented prior substantive relationship to show the SEC, or else you can't be sharing those private deals. So I get different investors, buyers, sellers, all that sort of stuff onto the show to find out what is their appetite for risk, their core competency, their buy box, basically what are they doing, what are they going to offer as competencies to their next deals. But before we get into those details, Boone, do you want to say a thing or two about yourself before we get started?
Yeah, just happy to be here. Love talking about real estate. Been doing it for a long time and looking forward to this chance encounter.
Excellent, excellent. So the first section that we have here, it's the distinct motivations. Before I do that, I have to say, but wait, check your eight. And Boone, I don't know if you have the uncanny ability to look through the audience's camera and at the 8 o'clock, it's there five, but under there might be a hideous red subscribe button that they really should hit because it's ugly, right? No, it's just a stupid joke I do in every episode. But the five distinct motivations. I've met lots of different syndicators, commercial real estate players, and they all have their own reasons for doing all this. But I need to know why somebody's actually going to follow through. And I found that all of the different reasons can be brought down to these five distinct motivations. So let's go through those. The first one is some people already own a portfolio of assets, and the way they make ends meet is from the proceeds of ownership. So the only reason they're going to be making a new acquisition is if inflation has been eating away at the purchasing power of the cash flow from ownership, or if they're buying at a steep discount, like if there's an asset crash. Now, that is not what I'm up to. What I'm up to is this one right here, trading time for wealth. See, I got a background in technology. Specifically, it's the CRM software funnels that accept credit card transactions. And that's actually how I got into real estate, which is a pretty weird way to do it. But the problem with having a tech job with a high salary, high wage, something like that, is you're going to be paying more in tax than anybody else. So it hit me, how can I pivot so that I'm working in return for deployed capital, aka equity? So that's why I'm doing all this stuff. But a lot of people, especially the newbies, they approach commercial real estate because they want to take control of their schedule. And maybe that means they want to fast track their retirement, but maybe it just means they want to work fewer months per year or fewer weeks per month or something like that. But that's different from the next group. They are full of hustle. They are full of ambition. They want to buy their entire hometown, and they want to make sure that their great grandchildren never have to hold a day job, that sort of thing. And that's great because they're just going to keep hustling into their 90s. Just like the last group, though, but their focus is a little bit different. They've found a sector of society, or maybe it's the environment, maybe it's animals. Who knows what it is, but they've realized that you need a significant financial backing if you're really going to make a big impact. And that's why they're making these acquisitions. So Boone, of these five different motivations here, what combination of those jumped out and would you say describes you best?
I think the one just really, it's kind of a combination of steady growth. I've been doing this for 20 years now, and it's great to have the big home runs, and we all like those. But it's not oil and gas. It's not speculative. It's steady as it goes, making smart buys, building a portfolio that creates both of those things of cash flow and equity and appreciation.
Mhm. All right, beautiful, beautiful. And that brings us straight into the next question because you're implying the risk is that's already in there. And some people on this show, they're new, they don't really have much experience. And what I need to do though is I need to make sure that the person I'm speaking to has some sort of clue that this can be risky. Nature can, throw all kinds of wrenches into the work. But if you could please, Boone, please fill in this blank. There are many popular investment asset classes, but I think blank is too risky. It can be real estate or non-real estate. What's too risky for you, Boone?
Oil and gas.
Mm-hmm. Mm-hmm. Yeah, I love it. I love it. I've got a great friend who says that he knows lots of people who've done oil and gas, and every single one has lost 100% of their money on it. So it's like I haven't had that kind of experience or exposure, but I don't know if you have anything else to say about it, or it's just an industry that you're not crazy about.
Well, if you've ever been on any kind of investor list where they sell you a number and you get calls and you talk to them and their sales pitch is, hey, you get to write off 80% of your losses. That's really not the best angle to go into any investment. And yeah, the 100% of your losses is more common than any kind of gain in oil and gas. So I stay away from those.
Understandable, understandable. And here's my ridiculous subscribe. This thing kills me every time I put it on here. It's just another reminder for people to subscribe. But this next section here is where I pull out the Dan Does Deals Commercial Competency Cube. You can get your own copy at dandoesdeals.com. I want you to do it. And so I did something really, really dumb, which is I didn't even ask for your email address. If you go to dandoesdeals.com, you can download and print out your own copy of this cube so that you can practice with your friends and family and all that kind of stuff. But more importantly, you learn how to effectively communicate on the subject of commercial real estate deals. And in every episode of Chance Encounters, I take 2 minutes to go through all 6 sides. And then that way you know exactly how my guest fits into these deals. And everyone, I start off with the repositioner. The repositioner is an acquisitions person. So they're looking at a bunch of different properties and doing a bunch of paperwork. What are they doing with this paperwork, you might ask? Well, there's a fancy word for it. They are underwriting the deal. That means they're doing the math. They're figuring out, first of all, is this property even actually making the amount of money that the seller slash broker is claiming it is? Because you don't really know. But a lot of people just call these guys acquisitions guys or investors or whatever. I call them repositioners because they're figuring out how do they change the property to find more upside. But one hidden thing that newbies might not be aware of when it comes to the repositioner business is every repositioner has to have some investor relations talking to financiers. Financiers are people who only deal with paper and money, so they do not have an active role in the deals. So if the repositioner can get more advantageous loans from their financiers, that actually goes straight to the bottom line of the business, the commercial real estate property itself. And so that's why they're always on the lookout for more advantageous lending. But let's say the repositioner isn't looking there. The next place they're going to look at is operations. They're going to stop those Benjamins from going down the toilet. But of course, there's more to operations than unclogging toilets and collecting rents and mowing lawns and all that kind of stuff. One of the places where I fit in the operations or asset management side is because of my marketing and my automation background. If we ever have a situation where we're outsourcing our operations to a property management team and there's a vacancy problem, then you need a really high-end marketer to make sure that you get those units filled. So, but the other problem about operations is because commercial real estate is so competitive, chances are that's not going to be enough upside for a lot of repositioners. So they're going to get a contractor team in to do a value add or renovations to the units. The idea being that tenants or residents are happy to pay more in rent for a newly renovated unit than the previous tenant was. But having your contractors working on things, it can be a money pit. You can just keep on dumping money in without any ROI, like if you're gold plating toilets and stuff like that. So very frequently, you'll always have to have somebody who's overseeing what they're doing, but you especially need that if you're like me. See, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, people who can be there in an hour or two, because that's not going to be me. I'd still be at the airport in an hour or two, so that's not going to help a whole lot. But when the repositioner has found the property, assembled the team, they're going to turn around to the financiers and banks and say, hey, I got this property that I want to buy. It's 350 units and it's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars, do you? Well, the financier is going to have another question on their mind, which is, who is your sponsor KP? And a lot of gurus and coaches, they really gloss over this part. But the reason why they're so important is, like, even if you're a physician and you've got a bunch of wealthy friends, you want to pull your resources together and take over an apartment complex, you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. On top of that, you also need a balance sheet of at least the amount of the loan and some liquidity. But if you have all these pieces, you've got yourself a commercial real estate deal. So Boone, I imagine, you said that you've been in this for 20 years. So I imagine you're a combination of repositioner and sponsor. And of course, everybody has some investor relations. But where would you say your contribution is most likely to be in your next commercial deal?
Certainly on the sponsor end, I started by doing acquisitions and repositioning and, upgrades and increasing rents and maximizing NOI to create the best exit price possible. Those got tighter and tighter with the amount of competition that came in seeking A, B, and C class properties over the last 12, 15 years. And I've moved into development. So now I look at putting together development deals to allow that when you do the construction, you built in your 20% equity pop. And of course, you're building in your cash flow because you're building at construction prices, and then cash flow comes off the top more predictably than digging back into walls and replacing toilets and bathrooms and kitchens and such that you have to do depending on the level of renovation required on an existing property. So that's the other component to it, is that now it's ground up building, and you got a Class A product when you get your CO, and you've got something that's not going to need significant capital increases and infusions for some time outside of just your general maintenance and make readies and upkeep.
All right, beautiful. I love it. And the next question that I always have, it has to do with the buy box, and you've already, clarified a lot of that anyway, but just for the audience's sake, I'm going to blow through it anyway. So when syndicators, investors are asking about your ideal property, they're really asking about three main things. The first one's geography. So which states, which counties, possibly even which neighborhood. The second one's going to be the size. So that has to do with unit count. And Boone, we'll get to whether you do in actual complexes or townhouses or what kind of ground up we do in a second. But that unit count is vitally important to know, because you're going to have different groups taking over 15 unit apartment complexes compared to the 150 or the 350 ones. But the third one is class. Boone already mentioned that. And I separate the word class into two separate words. First one's condition. So how old is it? Is it beat up? Is it in reasonably good shape? Is it bare bones, like no luxuries or amenities, or is it full of those amenities? Okay, so that's the condition. The second one, it means area. And what they're talking about then is, what's the crime rate like where this property is located? Well, how much traffic does it get? What are the school districts like where this property is located? But both of these two versions of class are rated with the same system as in grade school, with A plus at the top, and then A, and then A minus, and B plus. So Boone, do you want to go into any more detail as far as these ground up construction projects, like the size? You mentioned A class, but
yeah. I do some smaller projects. I'll pick a nice lot and an infill, to your point before, in a good neighborhood that's got schools and safe and clean and such, and I'll build 4 to 6 townhomes. So I've got some smaller $1 million to $2 million projects going on now in North Texas. And then the slightly larger ones are the significantly larger, but not the 300 unit complexes. I'm focused on the 55 plus and 62 plus markets. there's a couple of metrics there that really stand out that drive that versus just standard multifamily where your average stay is 12 to 16 months. Um, Not known to everyone, but readily available. If you do a little research, is that now average length of stay in the active adult 55 plus communities is over 5 years. And that's intriguing to me for two things. Obviously, just that length of residency from a single resident, but also the quality. They don't leave it all torn up and beat up where you've got to basically rebuild the thing after they leave, and you've got significant capital outlays to get your property and that unit back to rentable condition. So the 55 plus market I love, and that in financing, the financial markets, love it as well. And so that's my focus. And those larger, I've got two right now I'm bringing together. One's 112 units out in the Tyler market, and another one's 162 units in Fort Worth.
All right, good stuff, good stuff. So my next question then has to do with who you're disproportionately well suited to help in this industry among the different players. And this is definitely my favorite part of commercial real estate. It's because it's so multifaceted, and I don't care what anybody says. Nobody is going to be all the sides of this die for any meaningful amount of time. So we all have our own unique skill sets. We're all eager to build new teams, take down more deals, give referrals and all that sort of stuff. But even still, our unique skill sets mean we're better suited to help some people more than others. Me in general, I'm eager to meet lots of sponsors and KPs because of my marketing and my content creation, all the digital asset side of my skill set. So these guys, they'll already have the foundation prepared so that a person like me can make a really big difference. Whereas when you're first getting started, you need people who are putting in their 80-hour weeks, constantly doing outreach and stuff like that, where I'm more on the automated side. So it's the sponsors, and more I find the locals are people who I'm eager to meet. Boone, I don't know if you do any 506B deals or if you stick to 506C, but if you do have any 506B deals, it's really ill-advised to entice investors. If you have any donuts on your table, don't wave them in front of the camera. That would be very enticing, I'm sure. But if you do public offers, then that's perfectly fine. But who are you eager to talk to? Who's out there in the camera who you'd really be able to help more than others?
Typically, what I've found is I did some 506 Bs and Cs kind of 5 to 10 years ago, and found that was consuming the bulk of my time. There's a lot of time required to getting to know your investor. Like you mentioned before, how do you establish that relationship where they're not just being spammed with an opportunity, but if the SEC ever inquires, you can go back and show where you had a relationship before this person was ever offered an investment opportunity. And then the paperwork and the follow-up and the PPM and the execution of the subscription booklet and the follow-up and all, it's a whole nother job. So now in over the course of time, I've built a group of kind of core investors that I can go back to and just create LLCs and limited partnerships where I'm really just looking for a handful of investors who want to participate in this type of project, whether it's a few townhomes or whether it's 55 plus apartment communities, and form limited partnerships. Doesn't mean I'm opposed to 506B. I just don't have the time to do that. You talk about doing all six sides of the die. I can't do all six sides of the die. I've got a contractor that's really good. I've got an architect team that's really good. I've got an operator who's really good. I've got the core components of that. I've got to shape up the deals, bring them together, bring the financing. I serve as co-guarantor, so that helps cover a lot of the financing needs. Who's going to sign off on the debt and help initiate the project. And then the rest of the team can design it, build it, operate it, and then I'll oversee it until the point at which I say, okay, let's sell this thing.
Beautiful. I love it. And then as far as reaching out, I got this distinct last name, Friedenberg. So I'm really easy to find on LinkedIn, which is the platform that I use most often. And that's actually how I found the meetups where I met Boone. But this code right here, if you scan this with your phone, that brings you to the FAQs page of 506BME, which is the platform I offer syndicators so that you have those investor relations documented. You have proof that you knew their level of sophistication, appetite for risk, and all those key features. But Boone, if people want to reach out to you, is there a social media platform? Is there a website? How should people reach out?
Yeah, LinkedIn is good. I've having been around quite a while and having reached out, I've got, I don't know, 2,500 or so connections on LinkedIn, and it's very common and a productive way to build a business relationship. So Boone Nerren at LinkedIn, and there's not a whole lot of Boone Nerrens out there either, Dan. So pretty easy to find.
Exactly. Beautiful. And then the last thing, it's actually not for you, Boone. It's for you in the audience. It's a public service announcement, which is if you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, it's probably the hideous red button that's right down here. It says subscribe on it. And if you want to get rid of that awful, hideous red button, you just click on it and it's free. So it doesn't cost you anything. I don't even think you have to put your email in. At least I don't get your email. And it has a magical power, which is it means that YouTube might actually start paying for these videos instead of me. And I'd love that. And as far as the results for you, it means my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like Boone, I appreciate you joining me today. This has been great getting to know you a bit better.
Yeah, likewise. Thank you, Dan. Pleasure all around.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.